What's up guys, welcome back to the channel. In today's video I'm going to explain how to trade the ICT's unicorn concept. I'll teach you the unicorn strategy and how to trade it the right way. The unicorn strategy is one of ICT's simplest strategy. If you understand the concept of breaker blocks, understanding the unicorn strategy will be very easy for you. So don't panic, I will explain how breaker blocks are formed in this video, and I will equally explain how to trade with the unicorn strategy in this video. So pay attention till the end of this video because I will explain how to use this strategy. Before I explain how to use the unicorn strategy, one of the things you need to understand is the order flow. Okay, you need to understand the order flow of the market. So let's say in a situation we see price push the downside, a pullback, and this break of structure right now. So what you're going to do is, this is a break of structure which everyone knows. After the break of structure, what do we see? We have an order block right here, and a lot of people will look to trade from there. Okay, you see people will take trade from this order block, and after that we see price push to the downside again. We have another break of structure right here. So after the break of structure, what else do we see? We see price leaving this order block and price comes back once more to mitigate the order block. So when you see something like this, this means that the order flow is bearish. Price is pushing to the downside. So this is simply a bearish order flow. Okay, so I hope you see this. In case you're struggling and you don't yet understand what order flow means, I think I have a video on order flow. Maybe I will link it in the description so you watch it and understand exactly what order flow means. After this, our expectation is that price is going to come mitigate this particular zone and do what? And push to the downside. So price is bearish. Now what else do we have here? What we have here is another order block which we'll be looking to trade from. Now, how is a breaker block formed? A breaker block is simply a failed order block. And what do I mean by that? So we have a break of structure to the downside, and our expectation is that price is going to come back to mitigate the order block we have right here. So in a case where we see price blast through this order block, you see this particular order block right here, it failed to hold price. So once this order block fails to hold price, it automatically turns what into a breaker block, and a lot of people see a breaker block as their own point of interest. Like I said, I usually trade from order blocks and supply and demand zones. ICT trades, most times you see him trading from a fair value gap. Some people trade order blocks as their point of interest, and in some cases you see some people trading flip zones. Okay, so these are points of interest. So if you are a trader and you focus on breaker blocks, this is a point of interest. This order block that failed to hold price has automatically turned into a breaker block, and your expectation is that price is going to come back, mitigate this breaker block. Once price forms this breaker block, what you want to see is that you want to see price leave a fair value gap in between this candle right here. Remember, this order block failed and it turned into a breaker block. Now amongst this candle that pushed and broke structure to the upside, forming a change of character right here, because you know price has switched right now. This is showing us bullish intention. Okay, so this is a change of character. Now this candle, this multiple candle that pushed to the upside, which made this zone to fail, we want to see a fair value gap in this candle. Okay, when you see a fair value gap inside a breaker block, that's your point of interest, and that's the zone you'll be trading from. So your expectation is that price is going to come back, mitigate that zone. So how are you going to take this trade? So you're going to place your buy order at this zone. You can go ahead, place your stop loss below this low right here. There may be few pips below the low, and you can go ahead and target 1:2 risk to reward trade. So what price is going to do is price is going to come back, mitigate this, and push to the upside. So why we usually keep our stop loss below here is that in some cases we might have some fair value gap right here which price might come to fill, and in some other cases price might come very close to our order block to mitigate it before pushing to the upside. So like I said, this is exactly how to trade the unicorn concept. This is a very simple strategy. Like I said, if you understand the concept of breaker blocks, this strategy will be very easy for you. And that's the same thing if you want to go short. Let's say the order flow is bullish. Okay, we have a bullish order flow right here, price breaking structures to the upside, break of structure right here, and we equally have a break of structure right here. So what was price doing? Price was basically mitigating these zones. Now what do we have here? We have another zone, another block here which we'll be looking to trade from. What do we see price do? Price push to the upside, making the order block a failed order block. So what I said, you want to see a fair value gap in between this order block. Okay, the fair value gap could be here inside the failed order block, or we can actually see it maybe a little bit above here, or maybe inside this candle. Remember, it should be within this candle that's broke structure right here. So like I explained, what we want to do is you want to come over here, enter your position, stop loss above the high, and you can go for a quick 1:2 trade, or you can target any of the significant lows or high. Okay, you can go ahead and target it. So this is a very simple strategy like I just explained. So let me show you a few examples. This is NAS 100, the 1 minute time frame. I think I have one example right here. I will show you the example before I look to show you another example on EURUSD. So what can we actually see here? What you can actually see is that the order flow is bearish. Okay, you can see that price is pushing to the downside. If you try to read the price action right here, what you can see is that price is forming a break of structure to the downside. See, this is a break of structure over here. We have another break of structure, and what is price doing? Price is pushing to the downside. So this is a bearish order flow. The order flow is bearish. Let me zoom in a little more. You can clearly see another break of structure to the downside, and over here we have another break of structure to the downside. Now what was price doing? Price was basically mitigating order blocks. Okay, this particular place, you see price goes over to mitigate this fair value gap right here. Price mitigates a kind of a hidden zone right here, and over here you see price mitigating this order block right here, and price was just pushing to the downside. Now over here, what do we have? We have our zone right here, which we were looking to trade from. We have this order block right here. Since we are in a bearish market, price was pushing to the downside. What was our expectation? Our expectation is that price is going to come, mitigate this, and push to the downside. But what did we actually see price do? Price blast through the zone. Since price blast through the zone and the zone failed to hold price, what I just explained is that this automatically turns into a breaker block, and we'll be looking to trade from there. Now, since this is a breaker block and we have a fair value gap right here, which is certain that price is going to come back to fill in the fair value gap. If you look below here, we still have another fair value gap right here, which is why I said if you want to take the trade, you should place your order at this zone, stop loss below this low right here. At some point, you will see price coming back to mitigate an order block below here, or coming to fill in this fair value gap over here. So for this example, what did we actually see? So this is the breaker block right here, and price comes back to mitigate that zone. So what did I say? You should look for a quick 1:2 trade, or you can target the next liquidity high. So if you look right here, this is a very good liquidity area which you can target, because if you try to extend this line, you can see we have something like equal highs right here. So that's a very good area to target. So extending to that area, you can see we have a very quick 1:2 trade right here, a quick one. And if you try to trade your stop loss, if you tried to push your stop loss and lock in profits slowly, you can see how far price moved. Okay, you see from that area to this high, you see how far price moved before price reversed to the downside. And this was a good trade, and this actually happened on the 1 minute time frame. So it's possible that someone can actually hold this trade from that low till this particular area price reached, before we see price reversed a little more and continue to the upside. So this is how to trade the unicorn strategy, which is very simple. So let me show you one more example on EURUSD. So this is EURUSD, the 15 minutes time frame, and what can you actually see? Price has been in a downtrend. You can clearly see that price breaking structure to the downside. After the break of structure, we got this push to the downside, and if you continue to look, you can clearly see after this minor pullback right here, price breaks structure again. And right now we anticipate seeing another break of structure over here, and now you can see price actually spiked below this zone right here. I hope you can clearly see that price spikes below the zone, and let's wait for a clean close below that area. And now what can we actually see right here? Price closed below this zone right now, and from the look of things, if you look closely, you can see that price has actually mitigated this zone right here. So I will be looking to trade from this particular zone right there. Instead, I will look to trade from this one over here, because this one looks more fresh to me. Okay, so this is the zone we'll be looking to trade from, and let's see how it goes. And what can you actually see? Price blasts through that zone, and this order block that failed automatically turns into our breaker block. What did I instruct you should do? You should place your entry at this zone, because you can actually see this fair value gap. You can see the gap at this candle. This is a very good candle, so here should be your entry. Here should you place your stop loss at this low. Okay, this low is a very good area to place your stop loss. So where could be your target? I said you should go for a quick 1:2, or you look for the next liquidity zone. So if you look right here, here could be a very good target if you actually wanted to take this trade. Now let's press price forward and see how it goes. Okay, you see now the trade is active. Price taps into the zone, and you see how quick price moved out of that zone, and you see price pushing to the upside right now, and you can see its price hits our take profits, and you see how price reacted instantly to the downside, and now we're getting a pullback to the downside. This is a very simple strategy, and it's okay to train your eyes to see this setup and take advantage of that. So from what you can actually see, this is currently where price is, and you see this is EURUSD. Today is Friday, 19th of May, and you see this is a simple strategy if you train your eyes to see it once you move to the price chart. So what I want you to do right now, remember, any strategy you see me teach, go back and backtest it. So if you are totally new to this channel, consider subscribing to the channel. And Solomon Wisdom, and here is Born to Trade.